Hi, Merlin. Thanks for having me on the show again. My name's Anastasios Arima for some of the people that haven't met me, but TASA for short. I'm the founder and managing director, CEO of Hyperion Metals, which is a US-based critical materials development company. We're looking to develop titanium, rare earth, and other critical materials for the US supply chains, especially those future-facing ones like electric vehicles and consumer electronics. We've got some exciting stuff going on, and I'm really excited to share more of what we're doing with you today.
Thank you very much for the introduction. Good to meet you. Now, I understand you're moving towards a US listing. Is that right?
Yes. So we are changing our name from Hyperion Metals to Hyperion X. Along with looking at the US listing or pursuing a US listing, which we hope to achieve in the next few months. We think that that's going to give us a lot more opportunities to market to US investors, broaden that investor base, especially given we are a US-based company, a full US team. We have a lot of interactions with different customers, and naturally a lot of interactions with investors here in the US. We think that's going to benefit our company significantly as we move towards that.
You mentioned in the past that you didn't want to go over the interim step of getting an OTC listing, but you're just going to go straight for the NASDAQ. What's your, how much of your shareholder register at the moment is US based? Because that, if that changes, that's potentially a very different audience or a larger audience.
Yeah. It is a large audience. So we had completed US listings for a couple of my last companies, the latest one being Piedmont Lithium. We are pursuing exactly the same pathway as what we did with Piedmont Lithium, where when we are not raising money on the listing, we are doing just a 20F registration of our securities via an ADR onto a US exchange. So it's a fairly quick process. We wanted to avoid, we didn't want to avoid OTC just because we thought we could come onto NASDAQ in a relatively short space of time. We thought that doing the two-step sort of OTC, then NASDAQ was probably not required, and we'll put all our efforts into just completing the NASDAQ, the 20F and the NASDAQ.
Is the response you're getting, is there more interest in the US in the kind of the technology side going down the titanium metal route, or is there kind of appetite for the rare earth production and the kind of the whole integrated supply chain?
Integrated supply chain, there's a lot of interest in, especially in our government discussions, in understanding that we can sustainably produce the minerals and then take those minerals and sustainably produce the products that then can be used by the auto OEMs, the consumer electronics companies, and some of the other, and the defense industry, for instance. But naturally, the American investor understands midstream, downstream more than the extraction part of the industry. So there's naturally more of affinity towards getting more excited on the technological side, especially because that's patented process. It's lower cost. It's decarbonization. It's much more sustainable. So we naturally can talk a lot more with the US investor about that. They have a natural affinity towards that more. But then it is important as well to point out that ultimate integration and ultimate scale. Right now, for instance, we're taking titanium scrap and making it titanium metal powders. But ultimately, if you want to put titanium in every vehicle, in every battery pack, in every new electric vehicle, you're going to run out of scrap, and you're going to need that mineral feedstock. Same as, say, rare earths. Naturally, you're going to need that mineral feedstock to then put into the supply chain because there's just not enough rare earth scrap out there. So we probably lead in America with the discussion around the technological side, what we call our metals business, but naturally point out that we want to source sustainable sources of feedstock. And sustainable sources of feedstock can come from scrap, which is sustainably sourced and cleaned and ready for production, ready to go into our process, or sustainable source of mineral feedstock. So we do get onto that side. So go ahead, Melon.
Yeah, no, it's a big thing nowadays, isn't it? It's assured provenance. It's that traceability of your supply chain. Be able to, if you can get the link up with a kind of a commercial manufacturer of a product or a semi-finished product, which is then going to go into a consumer product, consumer good, whether it's a car or a cell phone. If there's assured provenance, that just adds credibility, and it gives you the kind of the ESG stamp of approval.
Mm-hmm. You've hit it nail on the head completely. You can have traceability and accountability when you can complete that supply chain. Right now, a lot of things that we do, even if we say extract, for instance, if you extract lithium spodumene and create lithium carbonate or lithium hydroxide today in America, there's no major cathode manufacturing facility. So that actually gets shipped offshore, gets manufactured into a lithium cathode, and then gets shipped back. And that's where, the lithium industry is bridging that supply chain gap here. So, and bringing it all here. So you can actually have better traceability and accountability and a better ESG, checkpoints for that material. Because once you ship it offshore, especially if it's going into some of these countries like China, where there's not as much of a focus on sustainability, in the production process, you don't know what's happening there. So for us, if we can bridge the gap from ore using partners and our own technology to manufacture the critical materials needed for America, that's a traceable, accountable supply chain right here in America.
Let's look at the resource, if you will. I've had a look at a few heavy mineral sands. I met an Australian geologist who said that one of the reasons he spent his career in mineral sands was because they were on the beach, and he liked surfing and he liked the beach life, and so he became a specialist in mineral sands. But yours is not on the beach.
No. So I'll just share something with you, Merlin, just quickly, just to show 3 slides to just quickly go through what we are. Can you see that well there?
Yes, I can.
So where we are located, excellent infrastructure for heavy mineral sand operation, if we look at the critical mineral operation, or the minerals business as we call it. Excellent to keep costs for access to end customers, but also for access to low cost operating and CapEx inputs. Now, where we are, we've defined a very large resource already in North America, but these sands where the resource is already defined on was the ancient beach 65 million years ago. So you could have gone surfing 65, 66 million years ago here in Camden, Tennessee, but right now you're about 5 hours away from the coast by drive. But these were ancient beach sands or beach dunes or barrier islands back 65, 66 million years ago. And these critical minerals were deposited from the erosion of the Appalachian Mountains and eventually deposited in these beach sands over time. And so there's a lot of them.
They stay relatively unconsolidated, no clay content, they're not compacted.
Typically what we see, Merlin, the unconsolidated sand starting relatively close to surface, relatively good heavy mineral grade, but also very good heavy mineral assemblage, with a rich amount of rare earths in them, quite a lot of monazite and xenotime actually in there, rich in NdPr and dysprosium and terbium as well. And what we see is that it is unconsolidated. We do have between 10 to 20% slimes or clay in there. We haven't seen any issues in our current processing for that. But we expect it to be amenable to large scale and very low cost processing options to develop the deposit.
Hydraulic mining, or is this going to be kind of a shovel and load?
So we're going to be looking at various options. There has been quite a large heavy mineral sand industry in the United States over the last sort of almost 100 years. It's died down a lot over the last 20, 30 years. There's a couple of operations remaining in Georgia operated by Chemours. They use mobile mining units. You could use truck shovel, you could use dozer trap. We are in the middle of our scoping study right now, going through a few iterations on different mining methods and processing options. But we expect it to be amenable to sort of the bulk, large-scale mining methods that you see in other deposits of this kind.
Are you, in your scoping study, when you're looking at kind of the various options of what it might look like, are you defining your output parameters, your product streams, and what you think the market can absorb, or what you think is right sized to the JORC resource that you've got kind of coming up? Or a combination of the two?
That's actually a really good question. I'm looking at it more from what would be the right size for an operation in this initial resource. So looking to right size it for financials and also what our customers want. What I can say is that our customers want as much as, or the potential customers that we're talking to want as much as we can give them. So if we have a look here as to what we look to produce, we'll have the typical heavy mineral sand extraction, typical heavy mineral sand wet concentration plant, just using spirals, come out with a rare earth rich heavy mineral concentrate, so rich in rare earths, titanium and zircon. We've got multiple different options to go through. We definitely see a lot of interest in all the products. So this option is definitely on the table, but it's higher capital, more complexity than, say, some of these options. We definitely want to extract the rare earths utilizing flotation, which has been highly successful in our pilot test work programs thus far, and we're doing some more test work now. We're actually doing PFS level testing as we speak. We're starting that today, even though we still haven't finished the scoping study, because that's a long lead time item for pre-feasibility studies, takes 6 months, and we're doing a lot more flotation test work there. So we definitely want to extract the rare earth concentrate, because the US will take as much as it can of it right now. But then on the titanium minerals, we definitely want to extract them as well, because again, the industry is completely import dependent on titanium minerals today in the US. And then with the zircon, there's definitely a want to have that zircon, or there could be the idea that we sell whatever's remaining of that concentrate out to, other groups that do mineral separation of the remaining minerals in that feed. But I think for titanium and rare earths, we definitely want to separate that out.
Last time I looked in any great detail at this sector was getting on for 10 years ago. And at the time, the Chinese totally dominated the rare earth separations. So there were no commercial plants in the West that were able to separate out your rare earths, because the physical and the kind of chemical characteristics of all of these of the light rare earths and the heavy rare earths are so subtle. It's very hard to actually separate them out. And the technology and the expertise wasn't really in the West. Where will you be processing your rare earth concentrates, and does that stay in the US or does that get offshored?
It's a great question, and it goes to what types of minerals you're trying to process. So you've got the sort of very low concentration minerals like the ionic clays and some of the other minerals. Typically, the ionic clays are really low in concentration. They're measured in parts per million, which always tells you that something's really low. But that is what the Chinese have really been able to progress. I think it's called their Bayonobo deposit, which is an iron, rare earth, ionic clay style deposit, which they extract from. But for us, we have monazite and xenotime. Once we concentrate out and float out that monazite and xenotime, that's a 50-60% rich concentrate of rare earths. That mineral is easily separated. It's very well known. We used to do that type of cracking and leaching to extract out the rare earths here in North America. Now, the residue of that is a thorium and uranium byproduct. So what we've done, and I'll share my screen very quickly again, is that we've developed a relationship with Energy Fuels. Energy Fuels has a uranium mill, one of the only processing plants outside of China, which can take in the monazite and xenotime and crack and leach it. And they actually utilize the thorium uranium byproduct as a byproduct, as a product for their uranium business. Now, then you're left with mixed rare earth carbonate or chlorides. They are planning on separation, and they are in the process of developing separation on site for that. So we expect in the next few years, they have plenty of cash. They're a plus $1 billion company listed on the NYSE. I know Mark Chun as well. Who is the CEO, excellent company, fantastic credentials. We see that the combination of us with almost unlimited feedstock and them with that midstream cracking, leaching, rare earth oxide separation that they have built and are building out the separation piece over the next few years, that we completely reshore ore to rare earth oxides in America. And then you're just left with this rare earth metal refining, NdPr magnet alloy manufacturing capacity. And we believe, and we announced last year, we're acquiring the technology rather than just licensing it. Our technology is an metal oxides to metal technology. Works really well on titanium metal, and that's a huge market. But we have had early promising results around other metals, including rare earths, and we're going to be looking at being able to take those oxides that are going to come off the back of that process with energy fuels to potentially see how our process could manufacture rare earth metals as well.
Is that the Blacksand Technology with the University of Utah?
Yes. Same as what we're doing on titanium metal right now. It's essentially taking titanium oxide, converting it into titanium metal. It has worked on zirconium, has worked on in previous work that was done by the University of Utah early on. They focused on titanium metal because that's a huge market, and the lightweighting of automobiles, which is what ARPA-E funded the technology for, was, where that big push was. There's a real need. It could be a multi-billion-dollar market, in our opinion, to open up more titanium metal. But now the need for looking at better, more sustainable and lower cost production methods for other metals, like rare earths, like zirconium, and like some other things like niobium, this technology has promise to work there. We need to do some more work around it. We will be over this year. But we have a fully operational facility here that as soon as we look at it and do it in the 500 kilogram scale, we can take it to the, it becomes modular at that point, and then exactly,
and then you're able to expand. That's really interesting, because so much of these rare earths are they're critical for the defense and the aerospace industry, for ballistic missiles, the neodymium and dysprosium and all these funny metals that go into guidance systems and, enhanced magnets. And it is a China-dominated production stream. So having that independence of supply, if you can go from oxide to metal, that is a potential game changer. However, and I do want to get downstream, but let's just no
problems. Let's stay upstream a little bit. Let's stay on the minerals business, as I call it. No problems. Yeah.
Stay on the minerals business. It's about the thing where I have got a modicum of an understanding. So in terms of your, I know you're only doing the scoping study at the moment, but in terms of your kind of revenue streams and your splits, let's lump the zircon in together with the ilmenite, or kind of ilmenite zircon-rich product. Is that where the bulk of the revenue sits, and the uranium rare earths is a kind of a sidecar that you might be able to optimize, you might be able to, or is it kind of a fundamental part of the revenue stream? Does this work on the ilmenite alone?
This would work on the titanium minerals alone, so the rutile, ilmenite, and zircon alone. It will definitely work, and it will make money. We are just lucky that we are in titanium minerals, so rutile, ilmenite, and then the ceramic minerals, zircons, have just prices for titanium and rutile and zircon are approaching $2,000 a ton. Ilmenite, we've heard prices, $350, $400 a ton in China. So, definitely works. But even at lower prices, more longer term prices that we've seen in the past, it definitely works just on that. But today, with the way the rare earths market is, and we've only got a very small amount of uranium and thorium in the monazite, so that we don't see it as a revenue stream. We see the rare earths as the revenue stream. The rare earths component, even if we just sold the monazite as a sale of a mineral, that's very high right now. We've heard prices above $10,000 or $10 a kilo for monazite, $10,000 a ton. in China. So you start plugging numbers like that and above in, and that dominates, even though it's a 2 to 3% of the mineral assemblage, because it's such a high value product, it becomes 30, 40, 50% of your revenues. Now we'll see in the scoping study, we're going to use what we think are sort of longer term prices, taking into account forecasts and what's happened in the past, and then looking towards groups that can help us assess that. We feel that, the world is short on supply on a lot of these minerals. So these minerals will stay relatively high compared to where they were, say, 10 years ago. And I still do think it will come through that we don't need it, but the monazite and xenotime, the rare earth minerals, that concentrate creates a significant revenue stream for us and pushes the IRRs and the NPVs significantly, ultimately in our scoping study, and I think will be a core component of what we're trying to achieve here, because it is such a core piece of the critical material supply chain that America needs to reshore here. And although it's 2 to 3%, this area is huge. This will only be the first of what we think are many other development projects in the McNairy Sand in this part of West Tennessee, and potentially going into Mississippi and Alabama as well. So we think that already we would have something which reshores a significant amount of rare earth minerals, but eventually has a significant chunk of the rare earth supply chain in America.
You've already said it, but so the 2 to 3% is by volume or by weight of your products, right?
By weight of the products.
Okay. And the monazite processing is a technology that it's a product that you can sell to internally in the US, and it's a technology that is, I always have in my head that what you were looking for is base monazite, because the monazites came with the uranium. Okay, you've got a solution to the uranium, but once you've stripped the uranium, is it a kind of a base monazite equivalent? Is that something that you can get?
Oh yeah, absolutely. So once you becomes a rare earth carbonate or rare earth chloride, mixed carbonate or chloride. So that is readily saleable. Like I said, Energy Fuels wants to separate that and create the separated rare earth oxides themselves. That is readily saleable. And then, of course, the rare earth metals are readily saleable. But yes, the monazite itself, monazite and xenotime concentrate themselves are readily saleable as well.
That's really interesting. Thank you. Now, I'm still going to stick with the upstream, because just in terms of the JORC resource, where you've got to and how much of your kind of land package have you worked, just in terms of, is it the relationship to what you've defined and the relationship to what you've potentially got?
Yeah, let me just pull it up for you again. Sorry for going back to this. But here is the JORC resource. We've got about close to 10 million tons of contained heavy minerals. And this was published sort of fourth quarter last year. Red is indicated, green is inferred. So we've got quite a large amount of drilled out resources already. 431 million tons, a big high grade core of a couple of 100 million tons, rich in the right sort of assemblage that we want. We've picked up more land to the side here since that result. We expect that to all be mineralized, and we're drilling that out. We've drilled out a lot here, seen some great results and picking up more land down here. And we've been drilling up through here and seeing very similar results. So we've seen strong results up through here as well. We would like to continue to build our land package throughout all the way through here. And so there's significant potential to expand that resource. But if you look at the rest of our land package, we also have got more down here, continue to build good packages down here with landowners. I mean, we will be leasing land all the time for as long as we're an operating company. We will lease for the next 20, 30 years. Will it be high grade everywhere throughout the McNairy Sand? I don't think so. Will it have heavy minerals? Generally, you're going to always see heavy minerals in some concentration throughout the McNairy Sand. Where we're targeting is where we're seeing it in high concentrations like what we have out here. And we are going to have we've got some further drilling going on out here that we'll be reporting in the future, some further drilling here. We've actually got some drilling happening on the Tennessee-Mississippi border, about 100 miles to the south of here as well. So we're just, like I say here, we're just touching, it's the tip of the iceberg. We think there's a significant amount of undeveloped, underexplored, and untapped critical minerals throughout here in West Tennessee, and we see these sands continue into Mississippi and Alabama. So the US, as a country, has got a significant amount of these critical materials. It's potential to be the Saudi Arabia of titanium and rare earth minerals if you could pick up enough land and do the drilling. Now, the land here is all private land, so you actually have to go in and negotiate with individual private landowners, whether it's 10 acres or whether it's 1,000 acres. So that's what sort of is the process you have to go through. But we believe that there's significant potential for additional resources just in this area and remaining in where these beach sands were 65 million years ago in Mississippi and Alabama as well.
And what's the vegetation like? What are you what are you dealing with? And how sparsely populated is it? Either when you speak to one farmer, is it over a large land package or one landowner?
So a large land, so the land looks like, I'll show you right here. The land pretty much looks like that. So this is in a soybean field. So in this part of the world and throughout most of West Tennessee, you have sort of farming, soybean, corn farming, and then you have quite a lot of timber. So the rest of it is sort of timber throughout there. That's one of our drill rigs that we had earlier last year. So it's quite agricultural focused land use. You're quite a ways away from large population centers. We have the town of Camden close to us, which is about 3,500 people. Benton County itself, where we operate mainly, and Henry County, between them, there's probably 30,000 people. Benton, Henry, and Carroll County, probably 40,000 people. So relative to, say, other parts of America, sparsely populated, agricultural focused, timber and agribusiness sort of industries. So that's why our focus is very much on sustainable mineral extraction practices. We're lucky in that, as you probably know, heavy mineral sands, it's active reclamation, so you're not leaving behind a big pit and reclaiming it 20 years later. You reclaim, you have active reclamation as you go. We are planning to work with University of Tennessee and their Institute of Agriculture and Professor Forbes Walker out of there, who is a world-renowned environmental sustainability, environmental scientist, soil scientist, to look at rehabilitation, reclamation practices, which exceed anything that anybody has done in the past. So we're very focused on that. We are a big part of the community. Our people live in the community. We deal with the community a lot. I've got friends there. We want to do the right thing. We want to, ideally, the legacy that we want to leave behind as a company is to leave the ground behind or the land behind in a better state than what we found it. So if we can improve soil quality there, if we can reintroduce native species of grasses, native species of trees, that's what we aim to do with our environmental practices. It's the right thing to do, and it's also right for business because, as I said, we will always be leasing. So if we haven't got a land package that we want today, but we're going to want to mine it in 5 years, if we've done the right thing over the next 5 years in development, that group should be will be most likely open to leasing to us in that future time. And it gives us a competitive advantage and sort of like a moat for our business, where we are the environmentally sustainable producer in the area, have developed this, and we are the natural first group that a mineral owner or landowner will come to say, hey, your mine's getting close, could you come and mine my area so I can get those royalties and you can put the land back in a better state than what it was before. Does that make sense?
Yeah, that all makes sense. Yeah, absolutely. We've got. I'll promise I'll finish with the questions on the upstream very soon, but I've got three really quick ones. One is, when is the scoping study going to be done? When are you looking to put it into production? And have you got I know the numbers will come out of the scoping study, but have you got a kind of a concept in your mind of what the kind of capex might look like?
Yeah, can't answer the last one because we've got to get through the scoping study and all that. What I will say is that, being in an area where you have infrastructure, you don't have to build power plants, you don't have to build, power lines, campsites, airports, that sort of stuff. You're going to be we should be more competitive than other similar operations. There's a few which are there's one which is in construction today, a few which has been constructed over the last few years. So we should be very competitive on both CapEx and OpEx costs, but we hope to, and we will show that hopefully in our scoping study. Scoping study timing, end of, go ahead, sorry.
So the one that's in construction at the moment, or the one that's being studied at the moment, what's the CapEx?
Coburn. It's Coburn. It's a very large mine and mineral processing operation being constructed by Primero, who we know well, and it's in Western Australia. It's a very large project, rich in titanium and zircon minerals as well. So on the scoping study, we hope to have that completed at the end of this quarter and be making an announcement not soon after that. We are well deep into that. We incorporated some other data that came in late last year, and we delayed it a bit to sort of upgrade that. We have already started our pre-feasibility test work programs. We've sent that to Australia, a big, I think it's a 14-ton bulk sample. So we are doing that with the aim that as soon as we finish scoping study, this is a relatively straightforward mine and mineral processing operation. So we aim to get that out and go straight into the pre-feasibility study. I would like to have a pre-feasibility study done by the third quarter and then move straight into definitive feasibility study, with the idea being that we complete that towards the end of this year, sort of early next year. At the same time, over this year, we would like to be preparing and be able to submit our key permits to the state and work with the communities around any of the permits that we need within the communities, especially within our community of within our counties, Benton, Henry and Carroll County, and work with the key leaders and councils there. But then the idea is that I would love to have the potential to be in construction in 2023, depending on where the markets are, what sort of offtake we've secured, when we want to start delivering minerals, and then from there it's construction and operation timeframe. So I think we can get there in a relatively short space of time over the next few years. But then it's really a decision by us as Hyperion Metals. When do we push the button? When do we go forward? When do we want to line it up with, we want it to be lined up with contracts, with downstream, with customers. And so, taking that into, all that into account helps us, will drive timeline as well. Because we think we can push this fairly quickly because of the type of mining and mineral processing operation it is and the need from it in America. And then it's really just up to us to sort of, I think, over the next few years, press the button when it's the ultimate time to optimize time to press the button to go.
Is it fair to say that the environmental permitting will be the critical path item?
The environmental permitting is really a state-driven process from what we see today. So we try and work closely, and again, we'll be working closely with the University of Tennessee, which is, is a state university. But we also want to work very closely with our communities, which drives a lot of that, get a lot of support there, which we have had thus far, and continue that support, continue to do the right thing in our operations and the right thing with our communities, and then work closely with the state in moving through that permitting process. Now, there's certain gates you need to go through, but we believe if we do the right thing, we work closely with our communities and with the state, that we can have this permitting completed at the same time as once we're ready to actually start construction of the project.
Let's go downstream finally.
No problems. Yeah.
So the Blacksand Technology, taking titanium oxide and turning it into titanium metal. You've got a pilot plant up and running. From what I can see, the market is absolutely huge, or the potential if you can bring the costs down. So can you just talk to me where you are on that pilot plant and that scaling up and that process?
Yeah, we are actually in the facilities. I'm actually in the facilities right now, and I'll quickly pull up a picture of where it came from. So the technology is based off a scientific breakthrough which Dr. Zak Fang had out of the University of Utah. And then he was funded by ARPA-E within the Department of Energy to scale the technology. And essentially he took it in the 2011, 12, 13 timeframe from small furnace to this very large furnace where we can do, quite large batches, 60 kilos a batch. We aim to take that even larger this year, multiples of that larger this year. And still it will be sort of a pilot demonstration scale, but it will be significantly enhanced. Very simple process, very simple, straightforward process, uses off-the-shelf technology, no very high temperatures. It's like baking a cake, the way I think about it, as I've been doing it. So the pilot facility is operating today. We're doing it right now. We've had a lot of interest from potential customers, not just from the defense side and aerospace side, but it's actually quite a lot more interest from auto and the sort of consumer electronics, consumer goods side. So again, can have a huge potential if we bring that cost down, because there's not only do we reshore the titanium metal supply chain, which is now being offshored in America as the mineral to metal supply chain, we also can have a disruptive effect on not just that titanium metal supply chain, but the aluminum and stainless steel supply chain as well. So that's where we see there being huge potential to scale this technology and create essentially like an age of titanium, where we proliferate the use of titanium in a lot more applications. Because there's lightweighting is a big thing for electric vehicles right now. Corrosion resistance, longevity of products is a big thing for consumer products right now. Recyclability is a very big thing as well, and our process is a 100% recyclable process. We're taking scrap now and making titanium metal powders. And so, I think there's a lot of potential to scale this, what is a relatively simple technology based on a scientific breakthrough, and create a massive new titanium market, and utilize this technology in other metals as well.
In consumer electronics, where does that go? What's the market opportunity there?
Consumer electronics uses, a lot of stainless steel, aluminum, and different things now. Same as consumer goods, luxury goods and stuff. You use stainless steel and aluminum now. We see opportunities where you could use titanium a lot more because it's lighter. It's just as strong and stronger than aluminum, just as strong. Its alloys can be just as strong or stronger than stainless steel, much more corrosion resistant. You can get good surface finish on it, can make different colors on it as well. So we see many big applications there. Like for instance, a lot of luxury watches can either be gold thing, but their base models are stainless steel, for instance. You do have models which are titanium already. And a lot of these companies, especially consumer-facing companies, want to have more of almost all of them have a sustainable approach. We see there being big opportunity there to introduce titanium into that supply chain. Now, we're going to introduce titanium into, replacement of Coke cans. That's not the point here. It's in the replacement of some everyday things which we use, where you would want the strength, you want the corrosion resistance and those sort of things. And we see there being potential huge applications there.
There's a demographic for carbon fiber bicycles, and I know that a lot of middle-aged men would also like a titanium bicycle, and there are certain question marks over the environmental impact of the environmental footprint of carbon fiber. So, yes. Right, thank you. Now, what about competition? Can someone nick this?
So this is all patented. There's a lot of trade secrets as well we have within here, and we are bolstering our portfolio of patents and our technology. So, we think that we've got good protection there. We always want to be, as a company, leading with a lot of research, and that's why we developed a strong relationship with the University of Utah and Dr. Zak Fang's group to continue research and continue improving and optimizing the process and always looking at better ways to do things. So we think we've got a lead there. We don't see anybody having the ability to do what we can do at scale. Our process already, we've seen since we've been operating it, and we will be coming out with some updates to the market, but we've seen some significant interest from industry, but also ourselves. We've seen the ability to scale this quite easily. So we're very enthused by it. And so we don't see anybody having the ability to do what we can do over the next, say, 5 years and introduce this, especially in this time frame where companies are retooling their processes for new products, especially in the electric vehicle supply chain. And they are looking for more sustainable options. They are looking for 100% recycled product if you can get it, or circular economy style products, decarbonisation. So we are driving towards meeting the needs for those new products that are going to be coming out in the next few years. And we see that we're one of the only companies that can potentially do that. So there's a lot of work for us to do still, but we hope over this year and next year, we can significantly scale and show where this technology could be and show how it could fit into some of these advanced products that we're making.
And when you're looking at your output from in your scoping study, you mentioned a kind of a revenue stream potentially coming from the rare earths. You've talked about the titanium oxides, the ilmenites, rutiles, and zircons. Are you looking at your market being existing consumers now in the conventional titanium oxide market, kind of the pigments and the paints? There are pacifiers. Or are you already putting in some element of your kind of market from this kind of fledgling technology? And how will that balance? How do you model that balance kind of going forward into your study phase?
Yeah, it's a great question. We actually keep it completely separate like I say, it's two business lines. We keep it completely separate. Eventually they will integrate, but in the current scoping study, we're basing it just off minerals business. So the scoping study will really just be with that, what we call our minerals business, assuming there is nothing to do with the metal side of the industry. The metals is separate to that. On the metal side of the business, as we move through this year, we will be doing some internal and potentially external techno-economic assessments. We will need to update the market on what we do there. But the focus here is scale up production of titanium metal powders for custom sampling and hopefully contracts or strategic partnerships, and also looking at opportunities to apply the technology in other metals like rare earths. So the technology side of the business is run very much like a technology company would be run in America. If you assume this was just the technology and we're a private company, we're running it like it's venture capital funded, just moving through it, scaling, creating the interest within industry, within partnerships, and then at some point we will be updating the market on various milestones, and at some point we will be looking to come out with, this is how much it will cost, this is how much we think we can bring cost down to, this is where we think the first products will be as well. Whereas the minerals business, we're running it very much like a traditional mineral business that we've operated in the past. This is what we produce. These are the existing titanium dioxide markets in the paint and pigment industry, the zircon markets, the rare earth market as a mineral into the current industry. Trying to keep it separate, and then it's just additive. Whatever contracts or EBITDA you get from your minerals business, whatever contracts and EBITDA you get from your metals business is just additive on top of that and integrates well.
What's the split this year, between the metals and the minerals business?
What is this? Sorry, I missed that.
Your funding split. Where are you allocating your capital?
Yeah, it would be half right now. Probably a little bit more skewed towards the technology. In the last quarter of last year, we did some major upgrades here at the plant, but we drill a lot, we lease a lot on the mineral side of the business to expand that mineral resource. We have geos down there always drilling. We have the scoping study going and the test work going, so that takes capital. And then on the technology side here at our facilities here, we are actually operating and making titanium metal powders, so that takes funding as well. So it's probably split about half, maybe a little bit more skewed towards the technology side. Depending on how things go this year, it may skew even further to the metal side of the business, just depending on how much larger we go at this facility. But we expect that then to be counteracted by actual strategic partnerships and potential, research or offtake partnerships with people that actually want the titanium metal powders.
Great story. If I was to look at this on a valuation basis, I should imagine it's hard to find peers on the technology on the metal side, but it's probably easier to find peers on the base metals. On the mineral side of the business. How do you? Perhaps I'm wrong. There are lots of peers on the metal side, but how do you stack up on your relative to your peers on the minerals business? Do you feel as if it's a buy one get one free, that you're not being valued yet for both sides of the business?
Yeah, I would. Yeah, I mean, as a manager, I'm always gonna think that. I try not to look at the share price day to day, because done this for a long time, being a director on listed companies for 15 years, almost all my career, right? Luckily, and value eventually comes as you hit milestones, and if you've got the right business, value eventually comes as you hit milestones and you show people what you can do. I think just on the minerals business, we're undervalued because one, there's comparables there just when you look at titanium and zircon, where we should be able to achieve more value right now. And then there's comparables there in the rare earth space. Today, the rare earth market is getting a lot of attention, and there's some comparables there in Australia, in London, in other companies where we have a significant amount of rare earth minerals, and we will be a major, or we hope to be a major rare earth mineral supplier in the future. And so we think we're undervalued just on that. When you look at the technology, and this is where I think you will have a better appreciation for how to value technology here in America, because there is more, a lot more comparables here, both public and private here, of disruptive technology companies. I think that will naturally come through as we hit milestones and as we bring it to the American investor, because they have an affinity towards technological disruptive firms. That's what they've invested in a lot of. You've seen a lot of that happen here in the American market. And that's a big reason for us wanting to move towards that US listing. But I think there's still some comparables in Australia we can compare ourselves against. There's some companies which are chasing sort of the similar integration dream in the critical material supply chain. You've got Australian Strategic Materials out there. I think that's a $1.2, $1.4 billion company. I think we're about $120 million right now. You've got American Pacific Borates, which has done extremely well the last few years, and are also pursuing an American listing. I believe they've just changed their name, focused on boron, from ore in the ground, going a bit downstream as well. So you've got a few comparables there where we still believe as a company we're undervalued. But ultimately, we feel confident that we hit our milestones, we get news out there, and we do the right thing, and we should be, there will be, we hope that there will be a re-rating in valuation in times to come. We're very confident in what potential our business has. And we've got a lot of cash on the balance sheet as well, so it's sort of that makes you feel comfortable. Because for me, as a manager, even though I'm one of the largest shareholders and the co-founder, I'm not looking to sell stock. So I don't mind. I'm looking at where the business will be in 5-10 years' time. You're only, for me, the share price and the valuation is around, I want to push that because I want to minimize dilution for not just myself, but all my shareholders. And so, I'm not concerned about what happens day to day. I'm just very much focused around trying to create that value to minimize dilution when we do have to raise capital. And minimizing dilution as well for us being here in America is also not just about, the share price and the valuation that we have right now, but it's also around the right strategic partnerships, because those strategic partnerships can bring minimal or non-dilutive funding opportunities, and maximizing our interaction with the current, government programs. There's a lot that have been released in the last few years out there, which are supporting critical material development. So, I try and not watch the share price. I try just build the business, build the opportunities for minimal or non-dilutive funding opportunities. And over the longer term, I hope that eventually drives value. That should drive value over the long term. But as you know, markets are up and down. Sometimes you don't know what's going on. Sometimes when you feel that you're undervalued, sometimes you'll look at it, you'll be in a business where you're like, oh, wow, that's overvalued. You never know, the market is the market. But hopefully over the longer term, it sort of averages itself out and the value is reflected upon what you've actually done in the business.
Thank you very much. Yeah, we live in interesting times in the market. There's a fair degree of turbulence out there. But thank you. That's been a really interesting and informative introduction to Hyperion. I look forward to following it over the next few months, particularly the results of the scoping study, really, so I can kind of get a handle on what the end products of that minerals business will look like. And with the other half of my brain, I'll be looking out for the progress on the metal side of the business. But thank you very much for your time.
Yep, real pleasure. Thanks very much, Merlin. Look forward to speaking to you again soon.